Hello and thank you for joining us again on Capital Market on Channels Television. I'm Ladi Williams. Let's take a look at how your money performed this week. Let's begin with market reviews. European stocks closed low on Friday as investors monitored economic data, corporate earnings, and the spread of the Delta COVID-19 variant. DAX fell by 0.57%, while the FTSE, the CAC declined by 0.06%. and 0.51% each to close the week. Meanwhile, official data shows that the Eurozone inflation slowed in June, with consumer prices rising 1.9% annually after a 2% climb in May, marking the first slowdown since September 2020. However, a surge in COVID-19 cases across the continent caused by the highly transmissible Delta variant continues to weigh on investor sentiment, with several major European countries forced to re-implement social restrictions, while the UK will take the gamble of removing its last layer of safeguards from Monday. Over to Asia Pacific now, with stocks closed mixed on Friday as the Bank of Japan held steady on monetary policy. The Nikkei 225 in Japan fell 0.98% to close. In mainland China, the Shanghai Composite dipped 0.71%, while the Shenzhen Component dropped 1.29% to close. Elsewhere, the Hang Seng Index in Hong Kong rose 0.2% as of its final hour of trading. Japan's central bank downgraded its real GDP forecast for 2021 to 3.8% growth as compared with the 4% growth forecast made in April. And U.S. stocks fell on Friday, pushing the Dow Jones Industrial Average into the red zone for the week as inflation fears overshadowed strong retail sales numbers and better than expected earning reports. The Dow lost 0.86% to close. The S&P 500 dipped 0.75%, while the Nasdaq Composite shed 0.8% at close of Friday's session. The three averages closed the week lower to each snap a three-week win streak. The Dow ended the week down 0.52%, while the S&P 500 dipped 0.97%, and the Nasdaq Composite fell 1.87% during the same period. And it's a similar picture back home. The Nigeria stock market ended the week negative as the NGX All-Share Index and the equity cap declined by 0.12%, marking the third consecutive week of bearish sentiment. This week's loss was driven by sell-offs in Nigerian breweries, Dangote Sugar, Zenith Bank, and Boa Cement. Meanwhile, the volume of shares traded within the 5 sessions was lower by 25.2%, in contrast to the previous week, as about a billion shares changed hands for 10.93 billion naira in 17,297 transactions. 2 out of the 5 key sectors of listed equities recorded gains, particularly the oil and gas index, which rose by 1.81%, while industrial, insurance, and consumer good indexes were the laggards for the week. The trio of GT Holdings and UBA, Zenith Bank were the top 3 most traded stocks for the week. FTN Cocoa Processors topped the list of stocks with the highest growth in share price, while Ikeja Hotels PLC led the losers chart. And joining us now is Mr. Rashid Yusuf, Managing Director at Trust Investment Yield, to give us his insight on what happened in the market. Great to have you, Mr. Yusuf.
It's my pleasure to have you. Thank you.
Thank you. Thank you. So, how would you describe the current state of the capital market in Nigeria?
Well, the current situation in Nigeria is not dramatically different from what I've seen in other capital markets, because you must know that, or take note of the fact that most of the markets are affected by what is happening around the whole world, the environment, the COVID-19 oil situation, all of this, and Nigeria capital market is not different. And what you are seeing being reflected by the Nigerian capital market is the combination of all of these factors. If you look at the various indices that have been sent out, you see that in terms of Nigeria's situation, you have a lot of our indices that are. If you look at Nigerian inflation rate, continue to drop. It might be stabilizing some recently. Then Nigerian private sector stock is also slowed down in June, and you have Nigerian trade gap widening and in March. You have Nigerian oil key interest sharply down steadily at 11.5%. Stock in Nigeria also reflecting all of this. And then also you have external factor like the oil price that is not as high as we in Nigeria would want it to be. And then you have the Nigerian service sector also shrinking. Nigerian jobless rate hit record low. And Fitch reverses Nigerian credit outlook to negative. So when you look at all of these factors, these are what the Nigerian Stock Exchange is reflecting. When you see a kind of either stabilizing or declining slightly. So from the global point of view, the Nigerian capital market has not done as badly as some markets. And it has been able to cope with the various factors that I have outlined that is affecting capital market globally. And so if you ask me, how has Nigeria come out of it? I think to the extent that Nigeria has been able to maintain some element of progress, I would say. I think Nigerian capital market has done well.
Okay. Well, one question that agitates many investors in Nigeria is which asset class to put their money in. In this era of negative return on investment, what's your advice here?
Well, you see, my advice is when you want to invest in the capital market, don't do like you do in Ponzi scheme and all of that. You have to go to your broker. The broker are the experts that understand the various classes of investment that are available. And the responsibility of the broker is to guide an investor. Do an analysis of each investment instrument. Tell an investor what are the positive points for a particular stock, what are the negative points against a particular stock, and then make their recommendation. Of course, it is up to the client to then accept that recommendation and follow it. But where a client for his own, people invest for various reasons. Where a client wants to invest might be for sentimental reason, then of course, that's a different kettle of fish. But if you go to your broker, even against the background of what we have talked about, if you go to your broker, it's not every stock that is declining or that are showing negative in these signs. There are some stocks that are doing very well, and the broker will be able to help you in putting your money in those companies that they have shown element of resistance to the negative environmental factor that we have been talking about, and that they have prospect, and they will guide you accordingly.
All right, but what are the stocks that can serve as a buffer against inflationary pressure on the market at the moment? We've seen the U.S. and U.K. get record highs with their inflation rate at this time, but we have a taper, surprisingly, in Nigeria. But what stocks would act as a buffer, against this inflationary pressure?
No, but again, if you look at the Nigerian situation, there are some companies that have done well, even against this constraining environment we're talking about. There are some companies that have come out with good reports, good results, and their prices have gone up. It's not every stock that their prices are negative. There are many that are doing well, and their management obviously have been able to find their way around the constraining factor that we're talking about, and they are doing well. And that's why I'm saying, what I don't want to get into is to get into the habit now of saying this particular stock or that particular stock. But there are many, whether in the banking sector, some of the stock are doing well. They've recorded good performances. Even in the oil sector, some of the companies have been able to turn around the corner and manage all the adversity that we're talking about, and they are doing well. In the manufacturing sector also, there are companies that are doing well. There are companies that are able to cope with the situation. If you look at the cement companies, some of them have been able to manage to overcome all of these challenges of COVID-19, challenges of oil prices shrinking, challenges of the global economy facing a kind of contraction. And they have done well. If you look at their result, their recent result, they've come out with good results. But some other companies have not been able to manage this changing environmental situation. And that has reflected negatively also in their account. So it depends on where you put your money and how you are monitoring. And that's why, again, I said that when you are playing the capital market, make your broker your guiding your guiding element, because it's your broker that will help you to navigate all of this analysis that we're talking about.
Okay. Well, as a seasoned, stockbroker, how would you, assess the impact of corporate earnings results in the first quarter of the year, as well as the first half results, which are, yet to be released, given the fact that the year-to-date performance of the market is currently at about a negative 6%?
Okay. I didn't get the other part of the question. You see, what did I think about? Can you repeat the question? Sorry.
No, I said, as a seasoned, stockbroker, how would you, assess the impact of corporate earnings results in the first quarter, of the year, as well as the first half results, given the fact that year-to-date performance in the market currently stands about negative 6%?
Yeah. Okay, that's again, you are nitpicking. Because if you are looking at the whole of the market, yes, what you say is correct. But what I'm trying to say is, let us not look at the indices that is reflecting the totality of the market, because you have so many stock in the market, and you must be able to look at your own portfolio and see which stock are outperforming the kind of rate, because there are some stocks that are performing the level that you are talking about. There are some stocks that are performing, and even so. What I'm saying is, when you are really assessing the capital market, you should look at the totality of the factors that are impending on the market, and then look at the individual performance of some of the stock in this various sector, in banking sector, in oil sector, in cement sector, in agri sector. If you look at the agri sector, for example, you find that, okay, there's a little dip by some of the leading companies in that sector. But that can be explained. You see what is happening in the economy. You see the other farmer conflict that is obstructing farm produce, that is affecting farmers. All of these are what is being reflected in the performance of some of these companies. If you are an agricultural, most of the companies that are recorded significant negative sector, in my view, on the exchange, are in the agriculture sector. And that is understandable at a great part of the year. Then it's only reasonable to see that some of those agri sector, they have lost substantially more than other companies operating in other sectors. And that is reflecting the uncertainty in that sector, brought about by the other farmer conflict, brought about by the various environmental changes that are also taking part, and all of that. And so that's why I am not really wanting to take a one-cap-fit-all position.
Okay.
I would rather do the sectorial analysis.
Okay. All right, Mr. Yusuf, no problem. Well, just hold on. We'll come back after the break and we'll continue the conversation. This is Capital Market. Do stay with us. Welcome back. Well, the Nigerian Exchange this week held a physical gun closing ceremony since the start of COVID-19 pandemic in the country last year, following the listing of shares of Guarantee Trust Holding Company PLC on the floor of the exchange. The event also featured the reveal of the company's new brand identity to capital market stakeholders and members of the public. Speaking at the event, the Group Chief Executive Officer of GTCO PLC, Mr. Segun Agbaje, thanked the NGX for its unwavering support in listing of the company following its transformation from just a Tier 1 lender to become a holding company. GTCO is the third listed financial institution on the Nigerian exchange to transform into a holding company after FBN and Stanbic IBTC Holdings.
Executive of Nigerian Stock Exchange, NGX.
And the Board of Guarantee Trust Holding Company, PLC, have appointed Miriam Olusanya as the new Managing Director of the Guarantee Trust Bank following the successful completion of its reorganization into a holding company structure. Similarly, the Board of FCMB Group, PLC, has appointed Yemisi Edun as the substantive Managing Director and Chief Executive Officer of the bank. A statement released by the bank said the announcement is subsequent to the end of service of the former Managing Director, Adam Nuru. Prior to her appointment, Edun was the Executive Director and Chief Financial Officer of the bank and previously served as the Acting Managing Director of the bank. The bank sector is presently witnessing an increase in the number of female managing directors and chief executive officers in the country. Let's bring back Mr. Rashid Yusuf now. Great to have you, and thank you for staying with us.
Thank you. My pleasure.
Yeah, so it's been over a year. There was a physical trading on the floor of the stock exchange. How are brokers reacting to this?
Reacting to what?
To the physical...
Say that again, please.
Okay, it's been over a year now since they had a physical, trading on the floor of the stock exchange with the opening gong. We just the closing gong. Yeah. So how are traders reacting to this?
Oh, okay.
And brokers.
Yeah, traders.
And brokers, exactly.
The traders are happy that floor is opening again with the guarantee relaunch. It's the first time that we are opening the floor, and we were very excited by that. We believe the market floor should be left open, and then we are not also going to do away with the remote trading. We are going to combine the two because they both have the advantages and disadvantages. But the advantages of having both are, in my view, weighs more than the disadvantage of picking one of the two. The floor enables broker to intermingle. The floor encourage better interaction.
Yes.
And also between broker and even the company that are coming to be listed. But the remote trading also has its advantages that, given Nigerian situation and situation of the infrastructure, a broker living in Kenya and trades, and then is caught up in traffic, it might not be there at the 12. So they both advantages and disadvantages. But it is better to have the two, and we are very excited by that.
Okay, makes sense having both sides of the coin. But looking at the latest appointments in the banking sector, with GTCO, FCMB, and others, there's an increase in female MDs in the sector. How do you see this trend?
Well, as far as the capital market is concerned, I think what we are more concerned about, are you having the right person at the right spot? It doesn't matter whether you are a female or a male. It is what you can offer. And so far, we've seen our female counterpart. Don't forget, most of these female counterparts are not just coming on board from the blues. They have been part of the system. They've grown through, they've climbed through the system, and they are now reaching the pinnacle of their various organizations. I think it is a very welcome development. Gender, in my own view, plays a small part. It is what you have up there, what you have to offer. And if they have to offer, they have something better to offer than their male counterpart, I think that's good for the market.
Exactly. Why not? Why not, as long as you can perform? All right, Mr. Yusuf, just hold on. I'll take you to our next conversation now. Nigeria's capital market is a key catalyst for the development of critical sectors of the economy, and that's according to the Minister of Finance and Budget and National Planning, Mrs. Zainab Ahmed. She made this known at a webinar organized by Securities and Exchange Commission in collaboration with the Federal Ministry of Mines and Steel Development. Speaking at the virtual meeting, the minister said the capital market was a credible platform for medium and long-term finance and economic development, and is crucial to unlocking the potential of the Nigerian mining industry. The minister also mentioned that the facilitation of funding and provision of structured market platforms, such as commodities exchanges, present significant addition for the mining and solid minerals sector. And also, the FMDQ Securities Exchange Limited has approved the quotation of the FBN Quest Merchant Bank's 7.34 billion naira commercial paper on its platform. Series 19 commercial paper under the bank's 100 billion naira commercial paper program is expected to support the issuer's short-term funding requirements. According to FMDQ, the admission of this commercial paper issue and other securities on its platform is reflective of potential of the Nigeria debt capital market and commendable level of confidence demonstrated by both issuers and investors. So, Mr. Yusuf, what new policy initiatives should the government put in place to boost investment in the capital market?
Well, there are lots of things that the government can do to boost investment in the capital market. First of all, is if you look at the fiscal policy of the government, there are lots of things to be done on the various taxes that the players in this market, the capital of the operator, are encouraged by giving some incentive in terms of tax allowances, in terms of tax relief, and all of this. We will want the Nigerian government to emulate the same thing. The engine, in this country, we put too much emphasis on our national budget. All over the world, national budget is an important part, but it is not the be-all and end-all. Private capital mobilized by the capital market that really determine the growth rate of the country or have a greater influence on the growth rate of the country. And Nigeria has so many opportunities that can be grown through the participation of the capital market. But the federal government has to put the necessary incentive in terms of tax incentive, in terms of tax holiday, in terms of creating some other enabling environment that will enable the capital market to take on some of this project. You see, a situation where the bulk of our budget is devoted to some service sector, then you need to have the capital market rising up, raising capital. And the capital market is ready, it's able, and it has the capacity to finance a lot of projects that the government is getting into. And that's why we are saying to the government, share some of these projects, let the private sector handle them. Let the capital market put the money together, both locally and internationally. So that Nigeria can grow. Can grow faster than we are. And stop being the poor capital of the world.
All right, Mr. Isu, we'll have to leave it there. Thank you so much for coming on Capital Market, even though we had some network glitches there. Thank you so much.
Thank you. You're welcome.
All right, and that's it on the Capital Market for the week. Thank you so much for watching. I'm Ladi Williams. Bye for now.